Now, some analysts have trimmed their 2011 earnings forecast for Singapore's offshore and marine players. Now, that's partly due to weak order book momentum and expected pressure on profit margins. But they say there are some bright spots on the horizon, such as the massive contracts to be awarded by Brazil's national oil company. Ryan Huang reports.
The offshore and marine sector saw better than expected second quarter earnings, but there could be less robust numbers going ahead, depending on order books. Major players Sembcorp Marine and Keppel Corp have both seen outstanding net orders decline in the past 2 quarters. There is also uncertainty after the Gulf of Mexico oil spill.
Drillers may adopt a wait-and-see attitude, so new order flow may be a bit slow. However, we think that it's still too early to conclude the ultimate impact because following the oil spill, there may be more stringent safety requirements and regulations which may favour more established yards with good track records. And both Keppel Corp and Sembcorp Marine fit the bill.
In the short term, analysts say some support could come from the repair and upgrading jobs, but there are bright spots in the longer term as well. Sembcorp Marine and Keppel are both bidding for a slice of about $20 billion worth of contracts being tendered by Brazil's national oil company, Petrobras. Clinching the deal could potentially result in record order book wins for both players this year.
If the contracts were to be awarded in the next quarter or so, that will be a strong catalyst to boost the share prices of Singapore yards. The Singapore yards stand a very strong chance to win these contracts because we have very strong track record in building rigs and production platforms for Petrobras in the last 10 years.
The consensus target price over the next 12 months for Keppel Corp is about 18% above current levels and 14% upside for Sembcorp Marine. Analysts say they may revise their recommendations once the results of the Petrobras tenders are out.